That headline number is a pretty...
it's a shocker.
It's a shocker.
It's a shocker.
When I saw that number, I went,
ooh, what happened here? Why? What do we miss? What did economists miss?
All right, let's talk about it here. Negative 92. I was going to do the numbers, Julia. Okay, negative 92,000. So the U.S. economy lost 92,000 non-farm payroll jobs in the month of February. That is a massive surprise compared to the 55,000 jobs that were expected to be added to the economy last month.
So that's the news we got last Friday. And then I kept sitting here scratching my head thinking, okay, the jobs numbers are this bad. The Federal Reserve's going to have to cut rates. But then I was like, wait, we got a whole bunch of information coming out next week, which is this week, on the jobs numbers. And we had actually some headline numbers come in this morning that actually says jobs aren't so bad. So if you're a homeowner, home buyer, maybe you're a realtor, loan officer trying to figure out what's going on with these things today, well, you came to the right channel, folks. My name is Dan Frio. I'm actually the host of the Rate Update. I'm also a licensed mortgage loan officer in all 50 states, as well as Puerto Rico. My slogan is one application, one credit pool. I'm going to compare your loan to over 30 different lenders. How? Why? I'll give you that at the end of this. You're here for these. So let's get to it. So last week we had this. We know the Federal Reserve, they look at the jobs reports, and they also look at inflation. Okay, we're going to go at inflation here in a little bit because we got oil spiking once again. So let's get to the jobs report. So we had a jobs report number that came in, and it was coming in pretty good. And then last week, we got that jobs number, 95,000 jobs were just poof, it vanished. The unemployment rate spiked up, and then now we're thinking, okay, the Fed's got to cut rates. But they're meeting next week, but I wanted to look at further numbers, and a lot of those numbers came in this week. And then today we got initial jobless claims and continued claims. So you'd think, okay, if the jobs report's that bad, those numbers are going to skyrocket. So how'd they come in? Well, that's what we're going to talk about in today's video, folks. So mortgage rates, they spiked yesterday. They're at the high end of my range at 6.25. I said mortgage rates between 6.25 and 5.875. You realize about a week and a half ago, we were like 5.99. So we're at the high end of my range. So let's get over to the news that's affecting these things and actually making mortgage rates jump right now. So let's get to the economic news. Okay, so here's what we had. We had that number last week, 93, 95,000, whatever it was. It was dismal. So I watched through the week, and then I'm like, okay, ADP, you know how I feel about ADP payroll numbers. Let's go up here. ADP payroll numbers came in on Tuesday. That number right over my head is 12,800 was the previous reading. There was 15.5 thousand new jobs created in the previous week. That's pretty good. Okay, that's, 60,000? Anything over 50,000 jobs created each month, that's pretty good. Okay, so that so far is okay. We go down through here. There's really nothing that came in on Wednesday. But then on Thursday, here's what we get. We get down through here, initial jobless claims. Okay, if you look through there, last reading was 214. It was expected to stay there. It actually did stay there. Okay, it went down just a little bit. Not a huge spike. Okay, so if you're thinking if 94 jobs just poofed, where'd they go? They're coming back or whatever. Well, did they ever go away? So right now we have initial jobless claims. It's not showing anything there, a big spike. Then you go over to continued claims. Here's what my big concern is. If you lost your job, can you find a new job? Because if you can, it's really not affecting the job market that much. So if you look at this continued jobless claims, the last reading was 1.87 million. It was supposed to drop to 1.85. It did. So that means, okay, if you got let go, less people are on continued claims, so you got absorbed back plus other people. So where'd that 90-something number come from? I'm just scratching that one off. So the jobs numbers so far, let's say it's kind of like everybody else says. It's low, higher, low, fire. So that's the piece of the puzzle, one piece of the puzzle that we've got so far today. So the jobs numbers, we'll give that an okay. Now let's get to the stock market. Now this is where it's every day it's a flip of a coin what's going on, and the culprit here is oil. And hopefully you've been a viewer of mine for years because we focus in on oil, and people always ask, why do you watch oil? Why? Now you understand how oil is a huge piece of the inflation puzzle. So here's my outlook, or here's my expectations of what's going to go on. This thing's going to be volatile as all get out. Mainstream media, they're pumping this stuff like crazy. There was a couple tankers, I don't know if they're oil tankers or not, I think hit last night. Those didn't appear to be traveling with oil through the Hormuz. they were docked for some reason. So check out, make sure you do all your due diligence, just like before you vote out there, folks. Before you vote, make sure you do all your due diligence on your candidate. But we're taking it on the chin once again. But don't freak out, because this might be positive by the end of the day. So here's what I want you to do. Check out my Stock Talk Tuesday I did last Tuesday. It was a special event, just helping people not to, jump out a window, because the market is hugely volatile. A lot of traders are getting rich on this thing. So right now we look at earnings season, doing pretty good. We look at the jobs report. If you extract out last week's number, it's looking pretty good. So now let's look at inflation, and the culprit here is going to be oil. So let's see how the markets are freaking out right now, especially the bond market, because that's why you're here, to check out what mortgage rates are going. So if you're really watching or trying to figure out what's going on with mortgage rates, subscribe over there. Watch my videos, 5-6 more minutes each morning. I'm going to show you this bond rate through here. This bond, why it's so important. If you see up through there, it says MBS. It's a mortgage bond. It's hard to find this thing. You can watch the 10-year Treasury or the Dow Jones, but what's the mortgage rates doing? So just join me each day, but all you have to understand is up through there. If that number up at the top next to MBS is green and in a positive number, that's good news. So green is good. Red is bad. The bigger the number green or the bigger the number red, the bigger the adjustment. Well, if you look at yesterday's news or yesterday's charts, we went down, 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 and away. What did that do to mortgage rates? Well, again, down is bad, so that means mortgage rates went up, and you got a pretty big bump yesterday. Okay, so now let's get to the next piece of the puzzle. The Fed's meeting in 6 days. We'll have a live event. I'll show you what happens, instant market reactions to all this. Then we're going to come in. Actually, we're going to come in after all of this, even the media. And I'm going to show you how what happened right when the Federal Reserve did what they did, and they're not going to cut rates. I'll show you that here in a second. But then once the media starts asking the Fed chairman some questions, that's when you start getting some movements. So I'm going to show you how that affects the markets. But right now, in 6 days, the Fed's going to meet. What are they going to do on all this information? Well, yesterday it was 99.3. Today it is 99.3. So if you go down through here, there's a 99.3% probability the Fed will not be doing anything. The probabilities at the next few meetings, it's off the board until what? July? Well, we're going to have a whole new cast of characters in June. So we're replacing the head of the Federal Reserve, I think in May, Federal Chairman Powell with Warsh. Check him out. So do your due diligence on them. But that's what's looking like down the pike on federal rate cuts. But you guys know, when the Federal Reserve cuts rates or not, that does have a minimum impact on mortgage rates. It's kind of eerie. So how you really understand this is you have to understand the stuff that the Federal Reserve monitors. It's inflation and jobs. So we went over the jobs report numbers, looking pretty darn good. And then here's now what's happening. You got oil spiking up to levels that people are saying this could hit $110, $20, $200 a barrel. I think we're going to be in a range right through here. I think the $100 is going to be the high end. But when you have the resolution here, it could be days, it could be weeks, it could be months. You're going to have the oil kind of really coming down from there. Here's the biggest thing to watch for. The longer the duration this goes out, the worse it is. And here's why. Because if you're an oil company right now, pumping oil, you have all these tankers, you're filling them. Once they're full and they can't move, well, now you got to stop production. Then once these oil companies stop production, that's where we're going to have delays and huge problems. So this resolution needs to happen fast, so oil can stay at these levels and then really plummet from there. Because if it lasts months, this is going to be sticky, and that's going to add to our inflationary numbers. So what would I do now if I'm a homeowner or a home buyer? I try to come out each day and explain to you guys, what would I do if I'm in your shoes? Well, I've been coming out for the last few months saying, okay, if you're a homeowner, you married that house and dated the rate, if your rate's over 7, reach out to us. Let us know if we can at least run the numbers for you to see if you can save some money. I have some calculators. They're free. I actually figured it out yesterday, so I'll let you know how to do that. But if you're a homeowner right now, your rate's over 7, reach out to us. Let's see if we can save you some money. But if you're looking to buy, where do I think rates are going to go? I'm still staying steady with my prediction right through here. Rates will be about 5.875 to 6.25. Yeah, we're hitting that mark right now, and we might even exceed my rates today over the next few weeks. But I'm expecting it to come down once all these conflicts resolve themselves, and it will resolve themselves. Now, the sooner, the better. So here's my expectations. If you're looking to maybe buy in the summer, you're looking to build, I think you should be okay. reach out to us. Make sure you get pre-approved, not pre-qualified, and then we'll track rates for you. And there are programs where you can do a long lock, you can do a lock and shop, things like that to help you out. But I wouldn't be much concerned about locking in, in a long-term situation right now. But if you're over 8% right now on your mortgage rate or over 7.5%, reach out to us. I'd love to help. Other than that, just continue to monitor rates, watch my channel down through there. And here's some tools I want to give you guys. If you're a homeowner, home buyer, realtor, or loan officer, these are all free for you. Make sure you use promo code Dan. Just type in Dan. I think it's all lowercase. Just keep trying it and you'll get them. Up through here, I just updated all these yesterday, and every one of them now has Dan. And if you go to the toolkit right through here, this gives you everything in the whole thing. So just grab that one. Make sure you grab them while they're free. But that's tools for you guys to use. Now, here's what I want you guys to do if you're a homeowner or a home buyer. If you're a homeowner, I created two tools up there, or one tool up there, basically. It's RateWatch 2.1. What I want you to do is let me do the monitoring for you. What rate would you like to refinance? I'll track it for you. How much a monthly savings would you want? Yeah, you can even put in, Dan, if I can save $300-400 a month, call me, text me, email me, track me down. I want to refinance. You can do that now as well in the RateWatch 2.1. So if you put your information in RateWatch 2.0, I'm trying to track them, but if you put it in 2.1, you can actually add in your monthly savings there. But wonder if you got a quote from somebody and you're like, hey, Dan, you mentioned at the beginning you compare rates and things like that with over 30 lenders. Let me explain to you what I do and who I am. My name is Dan Frio. Hopefully you figured that one out by now. I've been doing this for over 35 years. I'd love to help navigate you from basically keys in your pocket to keys in your application to keys in your pocket. Or if you're a homeowner, let's drive down that house payment to make housing a little more affordable. So I've been doing this for over 35 years. My slogan is one application, one credit pool. We're going to compare your offer to 35, 37 different lenders. How do we do that? Well, the bank I work at, I'm licensed in all 50 states as well as Puerto Rico, but we're also set up with almost 40 other lenders. So you can avoid this. What are you going to do if you're trying to refinance or buy a house? You're going to put in your application there, that bank, that credit union, and Bankrate.com's got 500 credit or mortgage companies on there. So you're going to do all that. You're going to have your credit ruined because everybody's going to pull your credit. Then you're going to get all these quotes and you're going to be like, now what? Okay, so why don't you use me? I can help you navigate through this whole entire process. Me and my team would love to help you. So join us each day at the rate update, the rate down through there. Subscribe each day, or join us right through here. If you need some help with a mortgage, click any of these buttons through here. There's a lot of great tools down here, and there's over 7,000 videos as well for you to go through, and I'm sure there's something there to help you out. So folks, my name is Dan Frio. I'm the host of the Rate Update and a nationwide mortgage loan officer. If you need help with a mortgage, I'd love to help you. But right now, I think mortgage rates, they're just going to be flat today, but watch oil because that's going to be the culprit of what drives this up or down. So thanks for watching. See you here tomorrow morning on how this starts yet another day. Take care, folks. See you then. Bye-bye.